So let us discuss another standard, which is PFRS 8 or operating segments. So PFRS 8 is focused on the disclosure requirements for operating segments. So which means the focus of this standard is the notes to the financial statements. So it doesn't necessarily have a significant effect on the statement of financial position, statement of comprehensive income, statement of changes in shareholders' equity, and statement of cash flows. Again, the focus of this standard is the notes to the financial statements. So first, let us define what is an operating segment. So according to the standard, an operating segment is a component of an entity that engages in business activities from which it may earn revenue and incur expenses, including revenue and expenses relating to transactions with other components of the same entity. So, in order to become an operating segment, it should be generating a revenue and it should incur expenses. So, which means that the component of an entity that is not generating any revenue but continues to incur expenses, they are not considered as an operating segment because, as the definition says, it should both earn revenue and incur expenses, even though the revenues and expenses are related to intercompany transactions. So, that is what we refer to the transactions with other components of the same entity. So this is commonly known as the intercompany transaction because an operating segment of an entity can engage in transactions with parties outside of the entity, and they can also engage in transactions with other segments that belongs to the same entity. Then next definition is an operating segment is a component of an entity whose operating results are regularly reviewed by the entity's chief operating decision maker to make decisions about resources to be allocated to the segment and assess its performance. So to become an operating segment, the operating results is being regularly reviewed. So this means that if the result of such operating segment is being regularly reviewed, it simply means that the operating result of such segment is significant to the performance of the entity as a whole, and for which discrete financial information is available. So these are the definition of an operating segment. So the focus of the standard PFRS 8 is the disclosure requirements for the reportable segments. So not all operating segments are considered as reportable segments. So if there is a reportable segment, which means there are segments that are considered as non-reportable. So how do we determine if a segment is a reportable segment? So the standard uses two approaches in identifying segments as reportable. So first is the management approach. So under the management approach of identifying a reportable segment, it means that the operating segments are identified on the basis of internal reports about components of an entity that are regularly reviewed by the chief operating decision maker in order to allocate resources to the segment and to assess its performance. So, using the management approach, our basis of determining a segment as a reportable segment is when the operating results of such segment is being regularly reviewed by the chief operating decision maker. So what is a chief operating decision maker? So this is a function involved in the allocation of resources to the segments and assess their performance. So not necessarily that the chief operating decision maker is a position within the entity, because sometimes the term chief operating decision maker is not used as a job position because this function can be performed by the president of the entity or chief executive officer or the CEO. So which means that, for example, if the CEO is involved in the allocation of resources to the segments and assess their performance, it means that the chief operating decision maker is the CEO or the chief executive officer, because as a CEO, part of its function is to allocate the resources to the segments and assess their performance. So this is the first approach in determining a reportable segment. So the next approach is the quantitative threshold. So for the quantitative threshold, we are using three bases. So first is the segment revenue. So when we say segment revenue, it includes external and internal revenue. When we say external revenue, these are revenue generated with outside parties. When we say outside parties, these are parties that are not related to the reporting entity. And when we say internal, these are the revenues that are generated by the segment with other segments that belongs to the reporting entity. So the segment revenue should at least be 10% of the combined external and internal revenue of all operating segments. Next is the absolute amount of profit or loss of the segment is at least 10% of the greater of the absolute amount of combined profit of all operating segments and combined loss of all operating segments. Then the last threshold is the assets of the segments are at least 10% of the combined assets of all operating segments. So using these two approaches, we can identify which segments are reportable. Any segment that fails to meet the requirements for both of the approaches are not considered as a reportable segment. So to better illustrate the procedure in the disclosure requirements for operating segments, so let us answer a problem. So this is quite long, so I will not read the problem word by word. Let us just dive into the requirements. So the requirements, let's start with letter A. Determine the reportable segments based on the 10% threshold. Again, what are the thresholds in the determination of reportable segments? So we have three thresholds, and that includes segment revenue, the profit or loss, and segment assets. Again, these thresholds are all at 10%. So we need to determine operating segments that will have at least 10% of any of these thresholds. Again, an operating segment is not required to meet all the three thresholds. One threshold is sufficient to become an operating segment as a reportable segment. So first, let us determine the reportable segment that will pass the asset threshold. So the asset threshold will be based on the assets of all operating segments. So this will be the amounts that will be analyzed. So starting with asset threshold, let us list down the assets of all operating segments. So starting with segment A, so this is 6 million. Then segment B has a total asset of 900,000 pesos. Segment C has 800,000. Segment D has 850,000 pesos. Then segment E has 500,000 total assets. Segment F has a 950,000 total asset. So the total assets of all operating segments is 10 million. And using the 10% threshold, the threshold will be 10% of 10 million, and that is 1 million pesos. So which means that any segment that has a total asset of at least 1 million is already considered as a reportable segment. And that is segment A. So segment A is the only segment that has a total asset that is at least 1 million. So the total asset of segment A is 6 million. So which means under the asset threshold, our reportable segment is segment A. So again, It is not required that segment A will pass the segment revenue and profit or loss threshold. Again, only one of the three thresholds is already enough to consider an operating segment as a reportable segment. So next, let us determine the reportable segment using the segment revenue. Again, the segment revenue pertains to total segment revenue, which includes external revenue and internal revenue. When we say external sales, these are the sales of each segment with parties that are outside to ABC company, which means these are unrelated entities or outside customers. When we say internal sales, these are sales of one segment to another segment within ABC company. So for example, segment A has an internal sale of 1.44 million. This could be a sale of segment A to segment B, segment C, segment D, E, or F. So which means these are sales within ABC company. So to start the revenue threshold, we will get the total of external revenue and internal revenue. So the total will be the basis of the threshold. So let's start to list down the external revenue of segment A, B, C, D, E, and F. So these are the external revenue of each segment, and it has a total of 20 million pesos. Then, based on our problem, we only have two segments that have internal sales, and those are segment A and segment B. So the total inter-segment sale is 1,680,000 pesos. So let us get the total of revenue for each segment. So for segment A, the total is 13,040,000 pesos. Segment B has a total of 2,040,000 pesos. Again, these are the total of external and internal revenue. And since for segments C, D, E, and F, we only have external revenue, so that will be the total revenue for each of these segments. Then the total revenue of all segments is 21,680,000 pesos. And using the 10% threshold, the 10% of 21,680,000 pesos is 2,168,000 pesos, which means that any segment that has a total revenue of at least 2,168,000 pesos will become a reportable segment. Again, based on our analysis, only segment A has a revenue of at least 2,168,000 pesos, which means there is no additional reportable segment using the revenue threshold because segment A is already considered as a reportable segment under the asset threshold. Now let us determine the reportable segment that will pass the profit or loss threshold. So unlike the segment revenue and asset threshold, so the profit or loss threshold is quite confusing. How do we determine the threshold based on the profit or loss? So we are going to use the absolute amount for the profit or loss of the segment. And we are going to get the total of profits of all operating segments and the total of the losses of all operating segments. And we are going to use, of course, the absolute amount. So what is the purpose of the absolute amount? Because we are going to compare the higher absolute amount between the total of all profits and the total of all losses. And whichever is the higher amount between the two absolute amounts, that will be the basis of our 10% threshold. So for the profit or loss threshold, we're going to compute the total of all profits and all losses separately for all operating segments. So based on the income statement of each of these segments, we have a net income before tax and net income after tax. So based on the additional information letter H, income tax expense is not used as a performance measure. So which means that we are going to use the net income before tax because the income tax expense is not being regularly reviewed by the chief operating decision maker. So again, the segments that have profits include segment A, B, D, and E. And the segments that have losses are segment C and segment F. So for segment A, the NIBT is 3,500,000. So segment B has 1,250,000 profit. Segment C has a loss of 450,000 pesos. And again, we are going to use the absolute amount. So we will not consider the negative sign. Then segment D has a profit of 500,000 pesos. Segment E has a profit also at 250,000 pesos. And segment F has a loss of 50,000 pesos. Then we will get the total for the profits. The total is 5,500,000 pesos and the loss is 500,000 pesos. Then between the two totals, the higher amount is 5,500,000 pesos. And the 10% threshold will be based on the 5,500,000 pesos. And the 10% of 5.5 million is 550,000 pesos, which means that any absolute amount of profit or loss that is at least 550,000 pesos will become a reportable segment. And among all the segments, only segment A and segment B has an absolute amount of more than or at least 550,000 pesos. So for segment A, we have 3.5 million and segment B is 1.25 million. So for segment C and segment F that have losses, their absolute amount is lower than the absolute amount of 550,000 pesos. So that is why C, D, E, and F are not reportable segments based on the profit or loss threshold. And using this threshold, we have an additional reportable segment, which is segment B. So again, based on the 10% quantitative threshold for asset, revenue, and profit or loss, we have two reportable segments, and those are segments A and segment B. Again, it is only required that a segment pass one of the three thresholds. It is not necessary that all threshold has been met. So once we are done with the determination of reportable segments using the quantitative threshold, we are going to use the additional threshold, which is the 75% threshold. And what is the purpose of the 75% threshold? This is to determine the additional reportable segments. So when do we need to add reportable segments? So this happens when the total external revenue of reportable segments that qualifies under the 10% threshold is less than 75% of the total external revenue of the entity. So which means if the external revenue is below 75%, we need to add reportable segments. So let us determine whether the external revenue of our reportable segments that pass the 10% quantitative threshold will meet the 75% threshold. So the analysis will only include the external revenue. So which means internal revenues are not part of the analysis. So we have two reportable segments and those are segment A and segment B. So the external revenue of our segments A and B is 13.4 million and that is the total of 11.6 million and 1.8 million. Then the total external revenue is 20 million. So 13.4 million divided by 20 million, we have 67%. So that is below 75%. So which means we need to add another reportable segments. And how do we do that? So to determine the additional reportable segment, we have aggregation criteria. So we have 5 aggregation criteria. And what is an aggregation criteria? So we are going to aggregate operating segments that have similar characteristics among the 5 aggregation criteria. So what are the aggregation criteria? So we have nature or product or service, nature of production process, types or class of customers, marketing method or the method used to distribute the product, the nature of the regulatory environment, for example, banking, insurance, or public entity. So in order for us to add reportable segments, we will look for operating segments that have similar characteristics among the five. And the characteristics must be at least three out of these five aggregation criteria. So if there are more than one segments that have similar characteristics of at least three among these five, they will be part of the reportable segments, and they are qualified as reportable segments based on the aggregation criteria. Which means, in order for us to determine the additional reportable segments, we need to determine the nature of each segment. So, of course, that is by reading the additional information. So, let us start with additional information letter A. All segments are operating within the same regulatory environment unless otherwise stated. So, there is already one characteristic that all segments share. So that is the regulatory environment, except for the segments that have a different regulatory environment. So next, additional information, letter B. Segment A is engaged in real estate. Then letter C, segment B is engaged in banking and has a stricter regulatory environment. So this time segment B is different from all other operating segments when it comes to the regulatory environment. Then letter D, segment C is engaged in pawn shops and money transfer, which has a similar regulatory environment as segment B. So which means segment B and C both have a regulatory environment that is different from other operating segments. However, these two share similar regulatory environment, while the other operating segments share similar regulatory environment as well, but different with segments B and C. Then letter E. Segment D and E are both engaged in retail of construction products. So, which means one of the five criteria, which is the type of products and services, segment D and E are similar. Segment D's products include locally made hardware products for different suppliers, while segment E sells high-end brands of hardware products that are all imported. So which means they are different when it comes to the acquisition or production of the products sold. Segment D's products are sold at prices more affordable than that of Segment E. That is why they cater to different customers. So as the customer, Segment D and E are different. However, due to the similar nature of products, the distribution and marketing methods are basically similar. So another characteristics that they share is the marketing and distribution method. So letter F, segment F is a new division of the entity which sells school and office supplies that caters to customers similar to segment D. So since segment F and D have similar customers, which means they share similar characteristics. However, segment F is more focused on e-commerce, hence the distribution and marketing process is different compared to segment D. So the products of segment F are internally manufactured by the entity. So as to the marketing and distribution method, segment F and D are different, as well as the acquisition or production method of segment F and D's products, because segment D's products are locally acquired, but for segment F, these are internally manufactured by the entity, so they are different. Then for additional information, G, H, and I, these are not related to the nature of the segments. So based on the additional information, letter A to letter F, let us now determine which segments will become additional reportable segments. So first, let us list down the five aggregation criteria. So we have product or service, production process, so types or class of customers, marketing or distribution method, and nature of regulatory environment. Again, to become additional reportable segments, the segments should share at least three similar characteristics among the five. So let us start with the product or service. So if you can still remember our analysis, so D and E have similar products or service. And as to production process, they are all different because D is locally made E's products are all imported, while F are all internally generated or manufactured by the entity. So for the types or class of customers, we have segment D and F. Then for the similar marketing and distribution method, we have D and E as well because they have similar products or service. Then for the nature of regulatory environment, we have D, E, and F because that is based on the additional information letter A, which states that all operating segments have the same nature of regulatory environment except for B and C. However, B and C have similar regulatory environment because they are engaged in the financing sector. So they are stricter as to the regulatory environment. So that will be segment B and C. So looking at these groupings, we need to look for at least three characteristics that is similar for operating segments, and that is segment D and E. Because segment D and E shares characteristics such as product or service, marketing method, and nature of regulatory environment. And we already have three characteristics for both D and E, so which means we have an additional reportable segment that passed the aggregation criteria. So after we have determined the additional reportable segments D and E, let us determine whether their external revenue, if added to that of segments A and B, will be at least 75% of the total external revenue. So the total external revenue of segments D and E is 3.2 million pesos, and that is 1.4 million plus 1.8 million pesos. Then let's add 3.2 million with 13.4 million pesos, so that is 16.6 million pesos. So this is the total external revenue for segments A, B, D, and E. Let us divide this by 20 million, so the percentage is 83%, so which means this is already more than the 75% threshold. So we have now our final list of reportable segments. So our reportable segments, first, those that qualify under the 10% quantitative thresholds. So those are segments A and B. And based on the aggregation criteria, the segments that qualified are segments D and E. So we have four reportable segments. So after we have determined the reportable segments, let us now focus on the disclosure requirements for the reportable segments. So we have first is the general information about the operating segment. So this includes the factors used to identify the reportable segments, including the basis and judgments used in the aggregation criteria, the type of products and services from which each reportable segment derives revenue. So basically, the first disclosure is a narrative description of the nature of the reportable segments. Then let us proceed to the quantitative disclosure. So next is the profit or loss for each reportable segment. So what are we going to disclose is the measure of segment profit or loss and each of the items from letter A to letter I, as long as these are part of the measure of the segment profit or loss, or if not part of the measure of the segment profit or loss, these are regularly reviewed or provided to the chief operating decision maker. Third disclosure is the segment assets and segment liabilities. Again, this is only disclosed if this is regularly provided to the chief operating decision maker, and the disclosure will be for each reportable segment. The fourth is the reconciliation. So let us now proceed to the disclosure requirements. So let us start with the quantitative disclosure. So since the general information only pertains to the narrative description of the nature of the segments that are reportable, so let us just dive into the quantitative threshold. So that will be the information about the reportable segments, profit or loss, assets, and liabilities. So again, we will just assume that these amounts are regularly reviewed by the Chief Operating Decision Maker. So first, let us list down the segments that are reportable. So that includes segment A, B, D, and E. So what happens to segment C and F? So they will be aggregated as part of the other segments column because they are non-reportable. So there is no need to separately identify segment C and segment F. So starting with profit or loss, we will just list the items from A to I that is part of the measure of the segment profit or loss. So let's start with letter A, revenues from external customers. So do we have a revenue from external customers? So based on the problem, we have an external revenue from customers. So this is the external sale. So basically, the disclosure requirements is just listing down all the amounts pertaining to the reportable segments. So let's start with external sales. The external sale for segment A is 11.6 million, segment B is 1.8 million, segment D is 1.4 million, segment E is 1.8 million. And for segment C and F, the totals of external revenue is 3.4 million pesos. So again, this requires only listing down of all the material amounts that are required to be disclosed. So next is letter B, revenues from transactions with other operating segments of the same entity. So this pertains to the internal or inter-segment sales. And based on the problem, we only have two segments, segment A and segment B, that have internal or inter-segment sales. Again, this will be listed down in the notes to the financial statements. So for the internal sales, we have segment A and segment B. Then we have no for D, E, and the other segments. Next is letter C, interest revenue. So based on the problem, we have no interest revenue. So let's skip and proceed to letter D. So interest expense. So do we have an interest expense? So based on the income statement, segment A is the only segment that has an interest expense. Again, this will be listed in the disclosure in the notes to the financial statements. So that will be interest expense of 216,200 for segment A. Then letter E, depreciation and amortization. So do we have a depreciation and amortization for the segments? So we have a depreciation expense for all the segments. So this will be listed down in the disclosure. So for the depreciation, we have segment A, 1,945,800. Segment B is 80,100. Segment D's depreciation is 153,000 pesos. Segment E is 373,500. And the depreciation expense for segment C and F has a total of 1,143,000 pesos. Then letter F, material items of income and expense disclosed in accordance with paragraph 97 of IAS 1, presentation of financial statements. So based on our income statement, we have no item related to letter F. Letter G, the entity's interest in the profit or loss of associates and joint ventures accounted for by the equity method. So if you will analyze the income statement of each segment, the profit or loss of associate or joint venture is not part of the measure of the segment's profit or loss. So letter H, income tax expense. So since based on the additional information, income tax expense is not regularly reviewed or provided to the chief operating decision maker as a measure of the segment's profit or loss, although we have an income tax expense, this will not part of the disclosure. Then letter I, material non-cash items other than depreciation and amortization. So this list is not all-inclusive, which means there could be additional item of income and expense that is part of the measure of the segment's profit or loss or being regularly reviewed or provided to the chief operating decision maker that is not part of this list. So if those items of income and expense is part of the measure or being regularly provided to the chief operating decision maker and is not part of the list, that will still be included in the notes to the financial statements. So let us now disclose the profit or loss of each segment. Again, this is the NIBT, net income before tax. So the profit or loss is 3.5 million for segment A. Again, this is the NIBT. Segment B, we have 1.25 million pesos. Segment D is 500,000. Segment E is 250,000 pesos. Then for segments C and F as other segments, the total is 500,000 pesos, and that is a loss. So after we're done with the profit or loss of the segments, let us now disclose the assets and liabilities of the segments. Again, this portion is only being disclosed if these are regularly provided to the Chief Operating Decision Maker. So let us now list the segment assets and segment liabilities. So for the assets, so segment A has a total asset of 6 million, segment B is 900,000, segment D is 850,000, segment E is 500, then the total assets of segments C and F is 1.75 million pesos. Then the liabilities of segment A is 1.38 million, segment B is 207,000, segment D is 195,500, segment E is 115,000 pesos, and the total for C and F is 402,500 pesos. So that ends the disclosure for the reportable segments profit or loss, assets, and liabilities. So let us now proceed to the reconciliation of the reportable segments revenue, profit or loss, assets, and liabilities. So what does the reconciliation pertain to? So the reconciliation pertain to the reconciliation of the reportable segments revenue to the revenue of the entity as a whole, the profit or loss of the reportable segments to the profit or loss of the entity as a whole, and reconciliation of the assets of reportable segments to the total assets of the entity as a whole, as well as the liabilities of reportable segments. This should be reconciled to the total liabilities of the entity as a whole and other material item of information. So let us start reconciling the revenue. So for the revenue, segments have external revenue and internal revenue. So the total revenue for segments that are reportable is 18,280,000 pesos. So this is the total of both external and internal sales. So that is why if you will get the total of this section, so the amount is 18,280,000 pesos. Next is the total revenue of non-reportable segments, and those are C and F. So the total is 3.4 million. So all of these are external revenue. So let us get the total of the segment revenues. So the total is 21,680,000 pesos. So let us determine if this is the total revenue presented in the income statement of the entity. So based on our income statement, the sales presented is at 20 million pesos, and this is not equal to the total segment revenues. So there is a difference. So what is the difference attributable to? So basically, the financial statements of an entity, so not just ABC company, so all entities, the financial statement should present account balances that resulted from transactions with outside parties. So which means, for example, in the income statement, all the revenues and expenses that are presented in the income statement of an entity should be generated or incurred with outside parties. So, for example, for sales, the sales that must be presented in the income statement of an entity is the total sales to outside customers. So, it does not include the sales within the entity. So, that is why if you will get the total of all external sales, this is 20 million. Which means that the 20 million sales in the income statement are all pertain to external sales, and the intersegment sales are not part of the income statement. And why is that? because intersegment sales are not considered sales as far as ABC company is concerned, because the intersegment sales, for example, segment B at 240,000, this is the sale of segment B to segment C, D, E, F, or segment A, which means this only involves transfer of resources from one segment to another segment that are all owned by ABC Company. So that is why, as far as ABC Company is concerned, intersegment sales are not considered as revenue because these are just transfer of resources within the entity. What is considered revenue are the sales generated from outside customers. So in order for us to reconcile, we need to eliminate or remove the intersegment revenue. So that is the total internal sales for segment A and segment B of 1,680,000 pesos. So that is the total of 1.44 million and 240,000 pesos. So 21,680 minus 1.68 million. So we have a total revenue of 20 million. So this is the amount of sales as presented in the income statement. So next, let us reconcile the segment's profit or loss to the profit or loss presented in the income statement. Again, we are going to use the NIBT because the income tax expense is not part of the measure of the segment profit or loss. So the profit or loss of the reportable segments has a total of 5.5 million pesos, and this is the total profit or loss of segments A, B, D, and E. So that is 5,500,000 pesos. Next is the profit or loss of non-reportable segments. So we have negative 5, so that is a loss of 500,000 pesos. So the total profit or loss of the segments, reportable and non-reportable, is 5 million pesos. So this is the NIBT. So again, let us check whether this is the NIBT presented in the income statement of ABC Company. So in our income statement, the NIBT is not 5 million. So let us look for the difference. So looking at the income statement, there are items of income and expense that is not part of the computation of segment profits or loss. So the first reconciling item is the intersegment transaction. Again, the income statement of ABC Company only includes items of income and expense that are generated or incurred from transactions with outside parties. So which means that the NIBT of 4,768,000 is the net income before tax generated from outside parties. And this does not include the inter-segment transactions. So we are going to eliminate that portion because the segment profit or loss of 5 million pesos includes the inter-segment transaction. And how much should be eliminated? So the amount to be eliminated is the gross profit. And why is that? Because looking at the income statement in the computation of segment profit or loss, we have internal sales and the cost of goods sold for the internal sales. So which means that in order to eliminate the intersegment sale and intersegment cost of goods sold, we need to eliminate the gross profit, and that is the difference between the sales and cost of sales. And the intersegment profit to be eliminated has a total of 1,032,000 pesos. And how is this computed? So the intersegment profit is 1,440,000 plus 240,000 less the 576,000 cost of goods sold from internal sales of segment A and less 72,000 cost of goods sold from internal sales. So that is 1,032,000 pesos. So other reconciling items includes items of income and expense that is not part of the measure of the segment profit or loss, and normally those pertains to the corporate headquarters. So which means that corporate headquarters can also generate certain types of income and incur expenses. And these are not part of the computation of segment profit or loss. However, those corporate headquarter income and expense are part of the entity's computation of NIBT. So looking at the income statement, we have items of income that are not considered in the measurement of segment profit or loss. And it includes the share in the profit of associate of 400,000 pesos and the unrealized gain from the change in fair value of investment property of 500,000 pesos. So the income and expense attributable to headquarters includes the share in profit of the associate. So that will be added 400,000 pesos and the unrealized gain from the change in fair value of 500,000 pesos. And additional reconciling item is the additional information letter G. The depreciation expense includes depreciation of corporate assets of 100,000 pesos. So which means that the depreciation expense in the income statement of 3,795,400 does not only include the depreciation expense of all segments, and it also includes the 100,000 pesos depreciation expense for the corporate headquarters assets. And this will become part of our reconciling item. So let us deduct the depreciation for corporate assets. So that is 100,000 pesos. So let us now get the total NIBT. So this is the net income before tax presented in the income statement. So at 4,768,000 pesos. So again, this is the net income before tax presented in the income statement. Now, for the asset, the total assets of the reportable segments is 8,250,000 pesos. So that is the total of segment A, B, D, and E's total assets. So at 8,250,000 pesos. Then the total assets of the non-reportable segments is 1,750,000, and that is segment C and segment F. So similar to our reconciliation of revenue and profit or loss, we need to consider two reconciling items, and those are the transactions within the entity and the assets attributable to the corporate headquarters. So first is the assets pertaining to intersegment transactions. So are there assets that pertains to intersegment transactions? So this asset, for example, includes accounts receivable of segment A from segment B. So again, these accounts receivable are intersegment assets. So which means these are included in the computation of the assets of the reportable and non-reportable segments. However, the assets presented in the balance sheet of ABC Company as an entity only includes assets, which includes accounts receivable from external customers, which means that the accounts receivable that must be presented in the balance sheet are only claims from outside customers, and it does not include claims from other segments within the entity. So in case there are similar assets that are a result of intersegment transaction, they will be part of the reconciliation. However, there is no information about the intersegment assets, so which means there will be no reconciling item related to intersegment transactions. So let us now proceed to the other reconciling item, which is the assets pertaining to corporate headquarters. Again, since we have a corporate headquarter, so the corporate headquarter has an asset. So the assets of the corporate headquarter is equipment, building, investment property, and investment in associate. So let us list the corporate assets. We have equipment, building, investment property, and investment in associate. So the total assets per statement of financial position or balance sheet is 14 million pesos. And how is this computed? So that is the total of segment A, B, C, D, E, F, and the corporate headquarters assets. So if you will total these amounts, the total is 14 million pesos. Then last is the liabilities. So the liabilities of reportable segments is 1,897,500. So again, that is the total for segment A, B, D, and E. Then for the non-reportable segments, we have 402,500 pesos. So again, our reconciling item will be the liabilities that resulted from intersegment transactions and the liabilities of the corporate headquarters. An example of intersegment liability would be an accounts payable of one segment to other segment. So for example, segment A has an accounts payable to segment B. So that is an intersegment liability that is not part of the liabilities presented by ABC Company in its statement of financial position, because the liabilities that appear in the statement of financial position of ABC Company are only liabilities to outside creditors, and it does not include the segment creditors. So since we have no liabilities from intersegment transactions, so we will proceed to the other reconciling item, which is the corporate liabilities. So the liabilities of the corporate headquarters is the accrued expenses and bonds payable. So for the corporate liabilities, let us just add the accrued expenses of 800 and bonds payable of 2 million pesos. So the total liabilities per statement of financial position is 5,100,000 pesos. And how do we reconcile this? So that is the total of all liabilities of all segments plus the corporate headquarters. So the total of this is 5,100,000 pesos. And that is the total liabilities presented in the statement of financial position. So to summarize the reconciliation procedure, so when reconciling the segment revenue, profit or loss, assets and liabilities to that of the entity presented in the financial statement, that is for the entity as a whole, we basically have two reconciling items, and those are the intersegment account balances. So it includes revenue, profit or loss, assets and liabilities resulting from intersegment transactions, and the other reconciling item is the account balances pertaining to the corporate headquarters. So first is the intersegment transaction. Why is it eliminated in the reconciliation procedure? Because again, in the financial statement of the entity as a whole, all account balances that must be presented, whether it is in the statement of financial position, income statement, all account balances should pertain to transactions with outside parties, and it does not include intersegment transactions. That is why those are eliminated. And the corporate headquarters account balances are also part of the reconciling item because the account balances pertaining to the corporate headquarters, although they are included in the financial statements of the entity, they are not included as part of the measure of the segment profit or loss. So that is why in order to reconcile, we consider the account balances related to corporate headquarters. So again, we have two reconciling items. In general, these are the intersegment transactions and corporate headquarter account balances. So after we have prepared the disclosure requirements for the reportable segments, so there are additional disclosures that is required entity-wide. So we have an entity-wide disclosures. So this is required to be disclosed by all entities if such information is not provided as part of the reportable segment information that we have prepared a while ago, except for numbers 1 and 2 when the necessary information is not available and the cost to develop it would be excessive. So what are the additional entity-wide disclosures? So first is the revenues to external customers about products and services. Next is the information about geographical areas attributable to the entity's domicile and to foreign countries. So that includes the revenue from external customers and non-current assets other than the financial instruments, deferred tax assets, post-employment benefits, and rights arising under insurance contracts. So which means if there are revenues from external customers and non-current assets under this section, we will disclose these information based on the geographical areas, which includes the domicile of the entity or the or the location of the registration of the entity and the other foreign countries. And the last is the information about major customer. So if the entity has a single customer providing revenue which amounts to 10% or more of an entity's external revenue, again, the basis is external revenue and 10%. So if 10% of the external revenue pertains to revenue from a single customer, so that will be separately disclosed. So what are the information to be disclosed? So the total amount of revenue from the major customer and the identity of the segments reporting such revenue without the need to disclose the amount of segment revenue from such major customer. So let us now proceed to the additional disclosure starting with number 1. So the revenues to external customers about products and services. So the first disclosure pertains to the disclosure of the revenues to external customers broken down based on the products and services. So it is not on a per segment disclosure, but on a per product or per services disclosure. However, we have no information as to the products and services related to the external revenue, so we will skip number 1 disclosure and proceed to number 2, which is the information about geographical areas. So we are going to disclose the revenues from external customers and list them down based on geographical areas as well as non-current assets, excluding financial instrument, DTA, post-employment benefit assets, and rights arising under insurance contracts. So based on our problem, our only geographical information is about the entity's revenue. So we have no geographical information as to the non-current assets because these are just non-current assets listed on a per segment basis. So based on our available data, we can only disclose about the geographical information of the external revenue. So we have US, Philippines, United Kingdom. So that will be segment A, B, C, D, E, and F. So these are the percentage of distribution. So to start the disclosure for the external revenue based on the geographical location, so let us start with segment A. So USA, so that is 9,280,000 pesos. In the Philippines, we have 1,160,000 pesos. Then UK is 1,160,000 pesos. So the total segment A external revenue is 11.6 million pesos. Again, the distribution of the external revenue in US, Philippines, and UK is based on the percentage presented in the problem. So the same procedure will be performed for segment B. So for segment B, we have 1.26 million USA, Philippines 360,000, UK is 180,000 pesos. So that is 1.8 million, the total external revenue of segment B. So segment D, 420,000 USA, Philippines 280,000, UK 700,000. The total segment D external revenue is 1.4 million. Again, this distribution of external revenue among these three locations is based on the percentage of distribution in the problem. So we just multiply these percentages to their external revenue. So let's proceed. Segment E. So USA is 360,000, Philippines is 1,080,000 pesos, UK is 360,000 pesos, so that is a total of 1.8 million pesos. Then for the other segments, C and F, the total is 2,120,000 pesos, Philippines is 680,000 pesos, UK is 600,000 pesos, then the total is 3.4 million. Then let us get the total for each geographical location. So USA is 13,440,000 pesos. For the Philippines, we have 3,560,000 pesos. UK is 3 million. So that is a total of 20 million external revenue. So other format of disclosure is that you can disclose the amount of 13.44 million, 3.56 million, and 3 million without any distribution as to the external revenue on a per segment basis. So it is sufficient that the 13.44, 3.56, and 3 million is presented in the disclosure. So let us now proceed to the last additional disclosure, which is the information about the major customer. So to be considered as a major customer, such customer or single customer should contribute 10% of the entity's external revenue. Again, internal revenue is not part of the analysis. So based on our additional information, letter I, out of the total revenues of segment A, sales to DEF Corporation amounted to 3 million pesos. So DEF Corporation is a single customer which contributed 3 million pesos sales of segment A. And since the external revenue of the entity is 20 million, and 10% of 20 million is 2 million, which means that the sale to DF Corporation, who is a single customer, exceeded the 10% threshold, which means the sale to DAF Corporation must be separately disclosed. So DAF Corporation is considered as a major customer again because the sale to DAF Corporation exceeded 10% of 20 million, which is the total external revenue. So to disclose, it is a narrative disclosure. So the sales of the entity amounting to 3 million pesos is contributed by a single customer of segment A, DEF. So the information to be disclosed is the amount as well as the segment that generated the sale to the single customer. So these are the procedure in the disclosure of the operating segments under PFRS 8.